we have a special guest, my buddy Nick.
You know what's funny is I've never played a game of hockey in my life.
Hey, you want to switch?
I really love the investing side of real estate.
We're consistently changing.
Yes, there's still opportunity here in Ontario.
I'm from Toronto, so I want a 5% cap rate. I'm like, that's great. I'm from Niagara.
I won't say too much here because a lot of this stuff is still ongoing or confidential.
Why do all of this for $200 in cash flow? Why?
I would literally, instead of sharing my wins, I'd share my losses. That's really the business. You're not winning every single deal.
The thing is, people are scared.
Predictions are a funny game. If you and I are feeling the slowdown, again, I'm not trying to be cocky here, but
I don't have a lot of faith that Pierre, or anybody for that matter.
Why are we in this position right now? But if you turn it up slowly, like I don't even know what that is. It's by accident.
It's Canada.
Yeah.
From wine country to cottage country, real estate is all about lifestyle. I'm Andrew Perry, and welcome to That. Welcome back to another episode of That Fine Life podcast. I'm your host, Andrew Perry. This is the podcast where we interview entrepreneurs, salespeople, brokers, and we really find out what it takes to live that fine life. Today we have a special guest, my buddy Nick Hill. I say that because not only are we buddies, but that's your Instagram handle. So that's how just like people introduce you. Hey, it's my buddy Nick.
That's literally how it started.
Yeah?
Yeah. I just had a bunch of people be like, oh, you got me my buddy Nick. And then I'm a friendly guy. I love making friends. I love meeting new people. So I just thought that'd be a funny little moniker to kind of throw on there, And now you're right. Now we're buddies.
That's right.
We were buddies already, but this is the first time we're actually meeting in person after years of kind of, flirting with each other online. Here we are.
Yeah, that's
it's
right.
Great.
That's right. And you know what? You kind of remind me of that comedian. What's his name? Christopher Alexander. Oh, I got to send him to you. He's fucking hilarious. He's just like a hockey guy, and he does all this hockey content style. I got to send him to you.
You know what's funny is I've never played a game of hockey in my life. I swear, and I know with the hair and the mustache.
Looks like Jeremy Roenick over here.
I know, and I'll take it as a compliment, but I grew up in Vancouver, and I played like provincial level soccer out there, and I was a pretty serious snowboarder.
Oh, nice, good.
And grew up on like snowboarding, Whistler, Grouse, Seymour, skied as well, mountain biked, and then when my parents moved us over to Ontario, I was like 11, turning 12 years old, and they're like, "Do you want?" A lot of people play hockey in Ontario. Do you want to play hockey, or do you want to keep playing soccer and snowboarding? My parents, I grew up, lower middle class, so they couldn't afford, and I'm the oldest of four boys.
Yeah,
they couldn't afford to put us in hockey and snowboarding. So I was like, of course I can choose snowboarding.
Yeah.
I'm good at it. I love it. And then we moved to Uxbridge, Ontario, and the closest resort there is like Lakeridge and Dagmar, which is like the equivalent of the Bunny Hill in where I grew up on. And then all my buddies are playing hockey. I'm like, I've made a horrible mistake.
So I actually left hockey to snowboard. So I'm like, because I was like missing all these practices. My parents were getting pissed. I'm like, I don't want to play if this means that I can't snowboard. It didn't really help me any. I wasn't. Well, and you were that good at any
punk rock band, snowboarding. You had to do it, right? It came with it. Yeah.
I did start skiing, but we took a class trip when I was in grade 9 to Mount St. Anne.
I took that same class trip, likely.
So we get to the top of this hill. It's like a 15-minute gondola ride, and we're like, hey, you want to switch? And so my first time snowboarding was down, a big-ass friggin' hill.
Love it.
Yeah, so you're a mortgage broker, right?
I am. I'd like to clarify that because apparently some people don't know. Yes, I'm a mortgage broker, among many other things. I don't even know if that is definitely something I do. I've got a really great team of people around me that help me do that here in Ontario as well as across the country. I have more fun doing the podcast. I love doing the podcast. I really love the investing side of real estate, and recently I've realized I really love teaching people the investing side of real estate from like a very simplistic, easy to understand, fundamental point of view, because that's something that I wanted like 15 years ago that I couldn't find here in Canada. And it did exist. It just, I had been following Bigger Pockets. Do you know Bigger Pockets?
Oh, yeah.
The States?
Beauty Brandon.
Yeah, of course. Yeah. Okay. Nice. Good. Yeah. Lucky guy.
Yeah.
So, he played a big role in my life, like growing up. Like every bike ride or run or. So,
do you know Aaron Armistuzzi?
I don't know.
So he's involved with Bigger Pockets. He's a good friend of mine. He owns Real Estate Rockstars.
Oh, okay. Yeah. No, I do know who he is. I don't know him, but I know who he is. And you've been
Yeah.
on their podcast. I think maybe I've seen.
Yeah, and
Yeah.
I spoke at his event
Yes.
2 years in a row.
Yes,
He's
amazing.
such a great guy, and he does auctions in a big way.
Yeah.
It's so different in the States. That's what I kind of wanted to talk to you about too. So I'm glad you brought up the investing. Like, as an investor myself, I'm a little bit of a dabbling on the international stage, so
Yep.
I'm liking
Very
that.
cool.
You're learning so much, but what I'm finding is that me personally and my clients personally is that there's really not. I don't want to say there's not cash flow opportunities, but like the appeal of the Canadian real estate market, just based on mortgage terms. Let's just say that that affects we're consistently changing. Where I feel like the States, okay, things change there too, but I think you have a little bit more of
If
a
you've locked
concrete
into something
plan.
for 10 years, the change doesn't really affect you. Or if you have a variable rate for 2-3 years, you're constantly,
Yeah, well,
subject to the interest rates.
that's right. So I think that because Canadians are forced to take a look at where they're at every 3 to 5 years, they're like, why don't I move? And okay, well, I've made some equity, so I'm willing to spend a little bit more. And I think that's contributing to that and a lack of inventory. So not to get too far off topic here, but what do you think is, from an investment standpoint, what do you think is happening inside of our market? Is there still opportunity here in Ontario? Is that why you're helping people kind of nationwide now?
Yeah, really great question, big question. The simple answer is yes, there's still opportunity here in Ontario, and there is, I think, an immense amount of opportunity across the country. A lot of it unrealized or overlooked, right? Obviously Ontario by far the most populous, right? I think 1 in 4 Canadians literally live in, the red line between Ottawa and London, Ontario, right? Like that whole piece right there. And Ontario was such a good investment market. There was so many good investment markets for years. And then the pandemic happened.
Yeah.
And everyone was sitting at home. And we don't need to go through this whole thing again, right? Everyone knows this story. Yeah. Everyone got money. But what a lot of people did with that money that didn't invest in the meme stocks is they went out and bought real estate.
Right.
Because, one, it was a tangible thing that you could go to and people wanted to get out of the house. But also, real estate courses and real estate content and everything like that, just, hockey stick up to the right at that point. So I think a lot of people just got brainwashed, and certain people were making a crazy amount of money overnight, by doing almost nothing, right? You go in and you don't even have to paint it anymore. You just hold it for like a month and, you've made a couple $100,000. So I think a lot of the fundamentals in Ontario were wiped out within like a year or two in a lot of markets. I mean, like take Oshawa, for example, right? Oshawa, the armpit of Ontario, right? Which I don't believe it is. I mean, there's some great parts in Oshawa, but there's some bad parts as well, just like there is
here.
Everywhere. St. Catharines, London, Coburg. My parents just moved to a beautiful town. Some rough spots,
Yeah.
In all the markets I invest in, they're half rough at least, right? Yeah. So anyways, back to Ontario. I think that there's still a lot of opportunity to be had. I just don't think it looks the same as it used to.
Right. So people just maybe need to be adjusting their goals a little bit.
100%. So going in and profiting tens or hundreds of thousands of dollars in under a year, unless you're like flipping it and you've got the flips on lock, change your expectation, right? I think what investing in Ontario looks like these days, outside of certain markets, which I'm not going to name because you got to go do that research yourself.
Yeah.
But you can still make money. You're just adding units. You're adding value. You're putting a laneway suite in the back. You're doing some kind of student rental or something. The traditional stuff like the burring that was super popular for a while is kind of on its way out. And what else I think Canadians, going back to the comparison between the Canadian and American market, Americans that live in California, some of them invest in California. Americans that live in New York, some of them invest in New York. But a lot of those Americans that live in those, best spots to live in the States don't invest there.
Right.
They invest in the Sun Belt or the Bible Belt or what other belts they got. I don't know, but they invest in those like secondary, tertiary markets.
Right.
Whereas Canadians, again, have this hesitation to go, if I can't drive to it, or I don't even really, I talk a lot to investors like, well, I want to invest in like my backyard. Okay, well, you live in Southern Ontario, so
Yeah.
good luck. And then like I'll tell them that, and they'll still have to go and spend days or hours or weeks and even go look at properties and be like, none of these cash flow. I'm like, exactly. So start driving until you qualify, drive until you quantify. But now that driving could mean going right out to the East Coast,
Yeah,
right? Or
it could mean spending 2 days in the
exactly,
car
right?
just to get out of Ontario.
It's not 4 hours, 5 hours anymore. It's 48 hours, right? And you're driving to Winnipeg or Red Deer, Alberta, or my new favorite spot, the Prairies, Saskatchewan, Regina, Saskatoon. I've been looking at deals out there, and I mean, you want to talk cash flow, you want to talk friendlier tenant regulations and landlord tenant board stuff, and major upsides in like a lot of demographic trends from growth to natural resources. And the main thing is it hasn't been discovered and overrun yet, like almost every market in Ontario. So very long-winded answer to your question.
But
yes, I think Ontario still has opportunities. I think they look different. And I think a lot of the traditional things, the 1% rule, the Burr method, all that kind of stuff, that can still work in other markets across the country because I know dozens of people doing it.
Right. Because I started experiencing this when, I sell commercial too, and I focus on, maybe some of the bigger deals and in our company anyways. Sorry. Where people from Toronto be like, well, I'm from Toronto, so I want a 5% cap rate. I'm like, that's great. I'm from Niagara. I wish we met 5 years ago. Because even in Niagara, finding anything under that 5, like we got people advertising, 3.5%, 4%, and they're like proud of it. They're like, this is 3.5 cap rate. And then people are saying, well, I'm coming from Toronto. I'm like, well, great. You've had a 0% cap rate for 20 years. So what is your goal here? Where I think for the average investor, it's because when I first got in, let me do a little backstory. When I first got into the industry, I was working with, a friend of the family who's an average investor, owned like 5-6 properties locally. And these were times when they were buying properties at 80 grand, 150 grand, 200 grand.
Take me back.
And, it's cash, maybe they're bringing in $800, maybe $1,000. And then eventually when I got into the market, that cash flow had dwindled down to like 250, 500. So I'm like,
and the prices had.
Exactly. Yeah. But they were still buying. And so I'm like, why do all of this for $200 in cash flow? Why? Because I didn't really understand it. And they're saying, look, I own something that's tangible. I can go there, I can view it, I can improve it, and on top of that, where else are you going to put your money other than under your bed or in your bank? She was Italian, so the money was not in the bank. It was under her bed.
More likely under the bed, yeah.
That's right. So
inside the mattress.
So that really opened my eyes, and then as I started investing, I started seeing the power of wealth through real estate and being able to, I don't want to use the word shelter, but to protect, because you're not sheltering anything. As soon as you make a move, you pay in the capital gains. Welcome to Canada.
Yeah.
But the fact that I was leveraging other people's money and being able to pay it off using somebody else's money and trying to replicate that process into a vehicle to make that $200 a month turn into $400, $800, $1,000, $2,000. So I think you're absolutely right. I still think there's a ton of opportunity here, but I do think that the goals have to change. You can't think about it as cash flow. You have to, hey, look, even if I'm putting in a couple $100 a month just for this particular property to work, as long as it makes sense for me. So what about, multifamily, commercial? What are you seeing on the lending side from a commercial standpoint? Because I've been trying to get a commercial mortgage for like almost a friggin' year. And it's, I should have just locked in at 8.49%, but the appraisal they gave me was so friggin' low.
Yeah.
So is the commercials, even though, is that maybe, okay, so if you could at least get in, is it still good opportunity?
It really is subjective, not only deal by deal, but investor by investor as well. Yeah. And it comes down to a few things. It comes down to your investment thesis, which is super important. It comes down to what return metrics are important for you, right? Cash flow is important, or is it more of a capital appreciation play, or a bit of both, or kind of, a cap rate or an IRR or a cash on cash return? All these things that different investors look for, right? And I'm not just talking institutional. Some mom and pop investors want or need different things, right? So very subjective on a deal by deal basis. It's tough out there. Yeah. It is tough out there, especially in Ontario, right? Which is where the majority of our business and currently all of my personal real estate holdings and like the portfolio I have with a small group, they're all in Ontario. Now we're all small multifamily between like 2 and 10 units kind of thing. But for our clients, when we're doing a lot of like larger deals, and I won't say too much here because a lot of this stuff is still ongoing or confidential, but it is hard, man. Yeah. There's deals falling apart. There's lenders walking away from deposits, just like we see end users walking away from deposits. Yep. There are a lot of really sad, frustrating stories that we've like deals that we've lost. I mean, I'm not going to sit here and tell we win every deal and all this stuff, right? Yeah. Like, I mean, I went through a period on Instagram, and I know you've done this stuff too, where I would literally, instead of sharing my wins, I'd share my losses and be like, lost 2 clients to the bank this week, deal fell through in an investment deal, just because that's really the business. You're not winning every single deal, and if you are, you're not
doing enough deals.
Exactly, or you're doing something sketchy and just undercutting everybody and providing whatever kind of service. But anyways, we've been losing more deals, and not because the deals have been going elsewhere. Sometimes they've been going elsewhere because banks are doing things I have not seen banks do in a long time. But also deals just aren't penciling. Right, they are just not penciling out, and now. And we can touch on this is the development space. So CMHC has this new product, MLI Select, mortgage loan insurance, and it's the best terms and conditions on the market, longest amortization, highest loan to value and loan to cost, best rates. So Dane and I, my co-host on our podcast, we've talked about it a lot because that's what Land Bank, one of our companies, does, is we do commercial mortgages, private lending, bridge loans, et cetera, construction loans. And so we've had all these people like try to apply for this program, but CMHC's now realized that they've given the best terms and conditions on the market, and that essentially this is the only thing that really makes a lot of projects work. So they've started to make it harder to qualify for that. So now they've made net worth. You have to have a certain net worth, 25% minimum of project worth, so $250,000 for $1 million project, but not a lot of these projects are $1 million, right? They're usually in the multi-millions.
Yeah,
and if you don't easily, right? And if you don't have, $1 million plus net worth, that's going to be an issue. They also want to see project management and property management experience. So, even me, we've got a portfolio of, I think we're closing on we just bought another small portfolio of 20 units this week. So we're at about 70 units. I've got the property management and the net worth to do something, but I might not have the project management experience.
Right.
So you really need to fit into all those slots. So now that's what we've seen a flood of people into, investors that are frustrated with not being able to purchase their next property because it doesn't hit their metrics. Yeah. So they're like, okay, well, I feel like a lot of investors get to a threshold where they've done enough of the small cap investing and they go one of two ways. They either go, I now become the bank and I become a private lender kind of thing.
I have been seeing that quite a bit.
Right? I mean, and like this is something that, if you look at the richest organizations, richest people in the world, it's like a lot of them on real estate and then they're all in banking above that, right? Yeah. Or they're developers. So you go real estate investor all the way up and then you kind of hit a split. You either keep on investing or you hold some of it, but you also start private lending or developing. Well, I think a lot of people have been kind of forced to make that decision very prematurely in their investing careers. And a lot of them don't have enough money to go into the private capital, private lending side of things. And that's a really difficult market right now. So a lot of them are trying to go into the development side of things. And that's proving to be very difficult as well. So we see a lot of investors kind of at a stalemate right now. Really, that feeling where you're like, you're an entrepreneur, your wheels are spinning, you want to do something and you can't because you don't know what to do.
So then I have my opinions on the residential market and what we're going to see. But for these types of investors that are forced to wait on the sidelines, that maybe they'll qualify for a particular project when the rates start going down. But that means that not only that investor is going to qualify, thousands of others.
Exactly.
So do you have any predictions about what you are seeing or what you feel might happen once those rates start going down?
I mean, predictions are a funny game over the last couple of years, right, man? Like, holy, like we have seen some volatility.
I was wrong probably 5 different times during those rate increases. I'm like, no way.
There's no way. They can't do it again. Yeah. Well, now it's funny, before we jump into that, now it's funny because you've got everyone predicting the cuts, right?
Yep.
But numbers keep coming back, and I think there's actually there's a rate announcement tomorrow.
Yes.
April 10th. April 10th. And is it April 10th or 12th?
What's today?
12th.
I thought it was April 20th.
Yeah. We're both. It never ends here, right? Real estate's a never-ending day. Now you've got all these people predicting rate cuts, and but the economy and consumer sentiment, I think, are so volatile right now that a couple headlines, a couple job numbers, something, and then the tides turn or the pendulum swing again. Everyone's like, no, we're not seeing cuts until the second half of this year, kind of thing. So before I make any predictions, I will say this: the best advice I can give for anyone that is sitting on the sidelines right now with dry powder, or however you want to look at it, that's, tires spinning, you want to deploy some capital. First of all, just wait and be patient. It's not a race to do that.
That's right.
Okay?
Like that.
Second of all, if you have been waiting and you are willing and ready to do it, maybe reanalyze your investment thesis, right? Maybe it's not in the GTA or not in that market that you've been doing very well in for the last several years in Southern Ontario or in Vancouver or in Ottawa or in any of the markets that went way up, or in the Airbnb space, right, with the luxury cottage rentals or anything like that may have changed or shifted over the last little while. Do a portfolio audit, look at everything that you have right now and saying, are my assets performing at their highest and best use? That's the first thing you should be doing. The second thing you should be doing is, okay, where in Canada, not where in Ontario, but where in Canada is the next opportunity for me as a real estate investor?
Interesting. And I think I like that play better from a commercial standpoint or an investment standpoint than, just a residential, because we saw what happened with COVID. Everybody moved out, expecting to
you
work.
guys went crazy because you guys deal in all luxury getaway markets for a lot of the point.
Well, that's right.
Muskoka,
people were
Niagara on the lake.
People were expecting hey, I can just move out here and work from home, and everybody's moving back, and they're like, shit. So, but from
I didn't make any money off this in the last couple of years.
That's right. Yeah. But from an investment standpoint, so if more people are flooding this market when those rates start to go down, theoretically, which we've seen in the past, is that the outlining markets and even interprovincial will start growing as well. So if you could, if you're waiting and itching, why not get into Saskatchewan or something right now, and then let that kind of appreciate over time. So because that's an interesting thing with the rates, where I was expecting more buyers, not like an influx, but I was expecting more buyers to be taking advantage of this slow time, and they just aren't. Do you think, I mean, from in Niagara anyways, maybe in Toronto there's people are still moving, but from a transaction standpoint, it's still been very slow here.
Man, it's been super slow.
Is this an education thing? Is this people are scared? Why? Because in my mind, it makes total sense. Why not get in at a higher rate? Because I think we all collectively feel that they shouldn't be going any higher in terms of a rate.
Let's sure hope not.
Right?
That would cause
why not do a term or a variable or something?
That would cause some serious pain. So I mean, what we're seeing right now, what we're advising a lot of clients is 2 and 3 years, 2 and 3 year fix. But we've seen a huge slowdown in on that side of the business, right? Yeah. I think it was the CREA stats that just came out, and this last month in the March was the lowest transaction volume, I think, since 2008. Wow. So this is not just, you and I feeling the slowdown.
Yeah, that's right.
If you and I are feeling the slowdown, again, I'm not trying to be cocky here, but if you and I are feeling, and I don't mean we do the most deals or anything, but
Right.
we've got our fingers on the pulse.
Exactly.
We know,
Yep.
we talk to a lot of other people, right? Like, and if we're looking at the slowdown, like I think before we hopped on, we were talking about how AI is going to start changing things. Well, I think this is the beginning of that, because I think we're going to have a large exodus of people out of the industry that don't make any money this year or next year. And if we also look at the renewal walls that are coming up, 2024 wasn't great for it, but like the majority of them are coming up in 25 and 26. So like, what is going to happen? And I mean, we've seen major volatility, and like I like to look at like a lot of like the indexes, not like the really fancy one, like the simple ones. Like, so like there's the fear and greed index, which is really cool. And you follow that, and that's basically that's a direct correlation with consumer sentiment, which is the invisible hand that really does move the economy. And if you look at Canadians, a lot of us are feeling a little poorer than last year.
That's right.
Right? I mean, I know I am, right? Gas more expensive, groceries more expensive. My girlfriend and I we're going to Italy in a week, actually. Today we leave in a week, and we're looking at the prices over there, and we was like, okay, we should go get some euros. So we're like, I was like, I'm gonna just like look up at like, even just $1,500 is in. How much do you think $1,500 is in euros? Canadian dollars and euros.
How much is 1,500 in euros?
Yeah, so like the conversion, like if I give $1,500, how many euros am I getting back? This is not a trick question.
Like 600.
Okay, it's not that bad. It's literally $1,000.
Wow.
I was like, maybe like 1150 or something like that. No, it's like 1,016.
Yeah.
I was like, so this is not fun. This is not a good time to be a Canadian, not a good time to be a Canadian in Canada, or a Canadian trying to travel, or a Canadian trying to invest or anything. So it's tough, and I think that we need to see some movement in interest rates, but I think we also need to see movement in other things. And I think the other things, and I'm not an economist by any stretch of the imagination. I leave that to Dan, who's our fake economist. But I mean, I think, and again, not to bring politics in this, but I think that Canada is just so rich with natural resources. We've got so much opportunity here from a land perspective, from a safety perspective, from just all of these amazing things. Yeah. Why are we in this position right now?
It's
brutal.
Here's my thing is that I'm a conservative. We talk about this all the time. But I don't have a lot of faith that Pierre, or anybody for that matter, not just him, it could be whoever. I don't think that they actually have the ability to come in and change things. Like in what I'm relating it to is like a Trump who would come in and change all these policies in the States, and even that he couldn't change a whole lot. No. So I don't know how we get out of this hole, because we should, and people are laughing at us, because we should be the wealthiest country in the world with what we have. In the
water,
fact that
lumber, potash, mining, like electricity,
even
like
the electricity, we
energies.
send it across the border and buy it back.
That's like the worst form of insider trading I think I've ever heard.
That's right. That's right. It's like, the politicians, was it Joe Rogan was talking about Nancy Pelosi being never making more than $179,000 a year, and
somehow has like a $50 million portfolio of stocks or something.
$120 million.
Okay, there we go.
An eighth of a billion. It's just very interesting. And I'm not saying that, the government's the only catalyst to our real estate economy. I mean, we have one of the best places to live in the world, and it's proved that. Yeah. Like, I would love to move to the States, but there's so much keeping me here too, right? But so where do we go from here? How do we get ourselves out of this? Because I just feel like it's just been so mismanaged for the past 8 years.
Yeah, that's weird correlation. I don't know what that is.
We were in a great spot.
There's charts about that.
Yeah.
Yeah, I mean, so Dan and I have been putting together a lot of you've probably seen them on Instagram, the interactive charts kind of
Yeah,
thing.
yeah.
And
You guys do that yourself? Like, how do you do that?
We've got a team member.
Right.
Right, yeah. I can't take the credit for,
Like,
for that kind of stuff. It was my idea, and then I was like, hey, let's find someone more talented that has time to do this, and we pay them to do it. But someone commented on and like these charts do quite well. I mean, a couple 100,000 views in some cases. Yep. We've actually had politicians share them on our behalf, which is pretty crazy.
That is crazy.
And a lot of the stuff is like we're looking at is per capita GDP, which is kind of a standard, a measure of a standard of living, right? We also look at like household. The one we posted last night was Canadians versus Americans household debt service coverage ratio. So how much money are you making to pay off your debts? And all of these charts, all of them are bad for Canada. Every single one of them. Yeah. Someone in the comments was like, hey, I really love these charts, guys. It makes the information easy to digest. But
That's
they
right,
all are so bad. And I was like, I commented back. I was like, we'll try to find a good one. But I don't know where we're going to find a good one.
That's right.
And I think it's, we can sit here and, I'm sure you and I could spend the rest of the day, maybe get a couple pints, talk about how bad the government is, maybe some wine.
Yeah,
I know you're a big wine guy. But sitting around and talking about it isn't going to do anything. We need to see change. We need to see change at all levels of government. Yeah, but I also think we need to see changes in Canadians. And I think, and I don't want to start pointing fingers at younger generations or any of that kind of stuff, because I'm a millennial myself, and I had my boomers pointing their fingers at me my whole life. Work harder, do this. And trust me, I've been working hard my whole life. And if I had worked this hard when, 20, 30, 40 years ago, I'd be in a very different state than I am now.
That's right.
And I just think that I just don't know what's wrong with the way that I don't know how we've gotten here. Because so many different things come into play. And again, we can't point fingers at everyone. We got to look in the mirror at some point and be like, am I doing enough for this country? Am I doing enough work? Am I creating something? Am I a contributing member of this society and this economy kind of thing? And I think a lot of people, the answer, if they really ask themselves, would be maybe not, or not enough.
Yeah.
So I think there's going to be some tough times ahead. I think we've been going through some tough times for the past.
That's right.
Year, 2, 3, 4 years now, maybe, with different things. I think this decade, probably from 2020 to 2030, will be looked back upon and studied in Canadian history, and it's now up to us to try to work our way out of it. Because if you look at a similar economy back in the day, and now much larger, much more successful. But Japan had what they call the lost decade, where essentially housing prices didn't grow, a lot of things just didn't move like they were an economy is supposed to.
Yeah.
And I don't know. I just hope that doesn't happen here.
Well, the one thing that
sorry, that got really dark and
no, it's good. It's good.
Stop there for a second.
Because one thing that I've noticed, increasingly over the past 4 years, is that people are just your average Canadian citizen. Look at Toronto, the lowest voter turnout for the mayor. Look, Olivia Jeff.
And then,
she's destroying
6
your
months
city.
Later, there's a rain tax. So go vote.
And here we go.
Go vote.
I forget what it was. It was 30% or something showed up to vote or something. Anyways,
pathetic,
but I've never in my life seen more Canadian citizens just either okay or approving, or just simply not caring about the amount of spending that we as a nation are doing, to the tune of billions. And where the fuck do you think this is? Where do you think we're going to be in 10 years when we have that money's got to come from somewhere? And goodbye. So now we've created a society that is fairly reliant on the government. Yep. It started with healthcare. People are now noticing that, hey, shit, since COVID, everybody's getting fucking cancer. Sorry to get too, conspiratorial. But now we rely on the government, but we can't because we've overloaded the system. Now we're going to, hey, wait, at least I can collect some checks from the government. Where do
Here's a couple hundred
now they're
bucks
going to start cutting
quarter.
all of that off. And you've been okay, or at least quiet, about giving away billions of dollars. And I think that's the biggest thing, because like Dan said when he was on our podcast, what now that more and more people can't afford to get into the home, like the home purchasing market themselves, renters economy. And then from there, we're already seeing it, more policy on the landlord-tenant relationship. We're going to see more government involvement is what I think. And, okay, great. You said, well, hey, as an investor, I could pick some of that up. I'm like, yeah, well, good luck competing against, although you did hear about BlackRock unloading a lot of, but that was their commercial.
Yeah.
So, interesting time. But who's going to pick that up? Government? And then if they're going to be even more control of your life? Right?
Yeah, I mean, it's that slow creep, right? It's that like
you're giving them that inch. They're going to take that mile.
You're sitting in that pot of water or whatever the analogy is, and it's slowly getting turned up. You're not like jumping into a pot. The frog in the water, right? You're not throwing a frog in a pot of boiling water. That'd be murder.
Yeah.
But if you turn it up slowly, like I don't even know what that is. It's it's by accident.
It's Canada.
Yeah.
Yeah.
I mean, the craziest thing is, you brought up a great point. Like, we've spent billions of dollars, and it's very scary. And we're heavily, heavily reliant on real estate here, not just the buying and selling of real estate, but the building material side, the mortgage agents, anyone in the finance departments, anywhere. Like, so much of our economy feeds into real estate. We're not going to be able to make billions of dollars back from real estate.
Right.
We're too far gone.
Olivia Chow might disagree. There's always more taxes.
Tax. What else can we? Sidewalk, gutters, the sides of your house. Let's go.
Yeah.
But for me, and like this is, I doubt this will ever happen. But if we did have leadership that was like, hey, we're gonna start running this country a bit more like a business.
Yeah.
And we're going to do it all as ethically as we can. We're going to do it all as ESG friendly as we can, environmental, social governance, all that stuff.
Yeah.
But we're going to start taking some oil, and we're going to start selling some water, and we're going to start cutting down some trees.
That's right.
And you can do that all and make a very small impact on the planet, and you can do that all and make a very large impact for Canadians.
That's right. I agree. That was very well said. That was very well said.
I was rehearsing on the way here, being like, "What am I going to tell him about my morning routine?"
ESG.
I was like, I get up at 3:30 in the morning. I get up before Andrew does. I post something before he does.
It's impossible. So you've got a wide spread of investors, clients, home buyers that you help nationwide, and what I noticed is that you guys are also helping kind of be that go-to source, for investment resources. You guys have the investment meetup, right? So how did that start? So, and what is that?
Yeah, well, maybe I'll just tell a bit of the story of how that all started, if that's okay.
Yeah.
So it all kind of started with the podcast, and I mean, podcasting, it's a game changer, right? It brings you with. You just get so many amazing experiences, a lot of great conversations.
Yeah.
So we had a podcast for a little while. It did okay, but we had this opportunity about 2 years ago. We were approached by the Canadian investor, who we endearingly call our podfathers. These guys have probably one of the biggest podcasts in the country, 200,000 downloads a month.
Wow.
Making a decent amount of money from it.
Yeah.
And Braden, the guy who started, it's like he's like 26 or 7 now. He's been podcasting since he was like 17.
And he's the podfather?
He's the podfather, yeah. And I'm 35, so I'm like,
I love it.
Yeah, no, these guys are really, really impressive. But they have a podcast. It's the Canadian Investor, and it's all about like stocks, bonds, capital markets kind of thing. Obviously, in the last couple of years, real estate has become I don't know if you've noticed, but a popular topic for a lot of people, right? Canadians in general just want to know what the hell is going on with real estate. So they started to get a lot of questions about real estate, interest rates, real estate investing as a strategy. And they're just like, we have no idea. Like, Braden rents in Toronto, Simone lives in Ottawa. They're like, so they started looking for guys that had a real estate podcast already to kind of bring them onto the network. They found Dan and I. One phone call later, we convinced them we were the guys, and we went to work. Took us like 2.5 months of prep work to write a bunch of episodes, hours and hours and hours of research into these episodes. And we launched. And I remember that launch day very, very well. We launched at number 1 it was nuts.
Yeah.
I thought there was like, I kept on refreshing. I was like, there's got to be like a typo or something, code error or something. This is weird. We stayed at number 1 for a while. Then we were at number 1 in the business category, and we've kind of never left the top 20. And that was almost 18 months ago now. And we just started to really try to give as much value as we possibly could back to everybody that was reaching out to us. We had so many people reaching out over LinkedIn, Instagram, the podcast, email. So we had all these amazing touch points with people, right? Someone would call me and be like, hey, can I bug you for a couple minutes of your time? And I, in everything I've ever done, entrepreneurial or not, I've always sought out mentors, people that are doing things that I want to do, people that are doing things that better than I am, people that are smarter than me, older than me, further along in their journey, whatever it may be. And I was like, I've definitely cashed in a lot of good mentor karma. Time for me to give some of that back. So for 2 years, I answered almost every email. I got on hundreds, if not 1,000 hours plus of phone calls with people from like Nunavut to New Brunswick to Victoria. There was people that would like, I got on a call with a guy from Holland at one time, and at one point he was like, I'm an ex-Canadian, but I'm thinking about buying back there. I was like, hey, this is crazy. So it really just, it opened up so many amazing doors and opportunities and conversations with really amazing people across the country, hearing all their different stories. And that's what gets me fired up, right? I love people. It gives me the energy. I love helping people, and I love being helped as well, but it's all about that reciprocity. So after all of that, we were like, Dan and I kind of looked at each other, we're like, we have all these touch points with people, and then we don't talk to them again.
Yeah, that's right.
Because I was like, I'm
it's
like,
a shame to have that just sitting there.
Exactly. And not only just that, like, but we weren't even looking at like, how do we capitalize off this? We were just looking at like, it was almost overwhelming, and it was like that pot of boiling water. It was like all of a sudden, I'm taking a phone call or two a week, and then like 3, 4, 5 months later, I'm like, there's hours of my week gone just giving people free advice and all this stuff. So got to a point where we're like, you know what, let's start to build something around this. We launched events. We actually, it all started, we flew out to Vancouver to interview Chip Wilson, which was a really great experience, billionaire founder of Lululemon, who owns $2 billion worth of real estate. Really, really great interview in his office in Gastown, Vancouver, overlooking the harbor and the mountains. And we're like, you know what, we're out here, let's throw an event. So we threw an event out there, and then we went to Calgary and Edmonton, threw big events there, and we're like, this is working. People like to do this. So we started to like think maybe we should start throwing these across the country. And I'm, funnily enough, actually, after I leave here, driving down to Windsor, Ontario to launch an event there tonight. And Dan is driving up to Sudbury, Ontario to launch an event there.
Well, awesome.
And really the idea with these events is to just, they're free. We call bars and restaurants. We've actually got some really great partnerships with bars and restaurants across the country. And we're like, can we show up with anywhere from 15 to 50 people on a second Tuesday of every month and just talk some shit about real estate? And the answer is always yes. And it's been a really exciting, really, really fun and cool way to interact with not only podcast listeners, but it's funny because we put them on Meetup. So people will show up and they'll come up to me and be like, hey, so why are you here? Like, what do you do? And I'll be like, oh, like this is our meetup. And they'll be like, oh, like, and I'll be like, you ever listen to the podcast? And they're like, what podcast? And I'm like, and they just found it on Meetup.
Yeah, on Meetup.
So it's been really, really cool. And then from there, we figured, okay, we want the education piece to kind of like, we're trying to build a whole thing, right? Essentially the bigger pockets of Canada is what is years and years ago, we were like, let's try to do something like that. And that led into realist.ca, which is our kind of online community through School, SKOL. Yep. Alex Hormozy, who just bought half of that. And we've got investors and developers and mortgage agents and realtors and like across the country now. So we're just really trying to build the online and in-person community for the next generation of real estate investors and professionals, because we know that the last few decades of the way the game was played does not work anymore. The rules have changed, the game has changed. So how do we teach and operate in this new world? And that's what we're trying to figure out with the help of hundreds of amazing people across the country.
Well, that's awesome, because that's how I found about it. I found out about it was meetups.
Really?
Yeah. I was like, because I kept like
awesome.
getting this like random notification. I'm like, wait a minute, I know these boys, right? And then I even reached out to Dan.
These
'cause
schmucks
Dan
are coming on my podcast.
Well, because even I reached out to Dan after he left my podcast because I saw his story. He's like, hey, looking to potentially set up something here in Niagara as well. I'm like, oh man, that'd be so great. I personally don't have the time to add another thing for myself, but
could
like
imagine.
from to help run it kind of thing. It's because it does take a lot of work.
We'll see if anyone in your office would want to.
Yeah, absolutely.
Yeah,
Well,
I mean,
you know what? I got the perfect guy in mind. Now that I'm
amazing.
thinking about it, thank you for
Look at that, doing deals live. Okay, this is not rehearsed, guys. This is how it's
not
done.
rehearsed. But I actually talked about something similar, and I've talked about it 3 times on stage because this presentation was actually pretty popular this year. It's like how to win business offline, and from a recruiting standpoint, from a deal standpoint, and just from a general networking standpoint, a good friend of mine does something similar. Her name's Shelby. She owns 5 pillar real estate in the Carolinas. She has it. It's called Pints and Properties.
Love it.
So it's the same on a Tuesday.
Dude, we were going to do one called First Time Home Beers.
Oh, that's pretty good. And so originally what it was just investment realtors who either, because I remember when I first started making a couple extra bucks in my first time in my life, first 2 years of real estate, right? So I was like, naturally my first locally was to go to Keller Williams because Keller Williams has a well-known real estate investing strategy and whatever. And so I went to a couple of their meetups and I thought, man, this is really, really cool. And then she brought it up as well. And she's doing it she was just doing it in a friendly networking way. Yeah. And as it turned out, because of her platform, she's with EXP, she was able to grow her EXP network and downline just simply by having like-minded individuals show up, talk about investments, and now they've created this network of people that work together in different ways than one.
Man, you said it right there. Like you get what you put out, right?
Right.
Like if you're adding value, and that's we had some people that we offered this position to, they didn't see the value in it, and I was like, you know what? I kind of want it to be a hell yes or a hell no thing.
Yes, yeah.
Because if it's a maybe, I'll see if I can get out kind of thing. You've already lost it. You've already lost me, and that energy is gonna transfer to the people there, right? Whereas the guys that I'm heading down who launched it in Windsor, they made an Instagram video about it. We collabed on it. Yeah. They dressed up in costume and all this shit. They went all out, and now we've got 50 people coming tonight. And those are just the people that have responded on meetup.com. I'm sure we'll have more. And again, the way that we do it, similar to your friends, is we make it super casual. Yep. If you don't own any property, if you are 1 week into getting your real estate license, if you're like, I think I might leave my career and get into real estate, or if you own 12 properties or 100 properties, you are more than welcome to come.
Yeah.
And there's that beginner's mind thing where even an expert's like, well, why would I go if there's going to be beginners there? And it's like, well, because that beginner's going to ask you, that beginner's going to ask you a question or tell you something that you may not know, or prompt you to think about something that you haven't thought about. And I've seen a lot of amazing friendships and deals and connections and all this stuff come out of these events that are, again, free. We don't make any money off of them. We literally just they're just there to add value and to bring good people together.
I love
It's a beautiful thing.
I appreciate it. So what else do you got? We're wrapping it up now. So what else do you got on the go? Let the audience know where to find you, what they could expect.
Yeah, I'd say the best place to figure out what else we got going on, because we do have a few things, just such as yourself, right? We've really pulled a lot of great people and resources together to be able to offer different services across the country. Best place to start is the podcast, The Canadian Real Estate Investor. If you're interested in the course and community, realist.ca, and if you want to be my buddy Nick on Instagram. That's it.
Perfect. Yeah. All right, buddy. Well, thanks for coming on the pod, pal.
Thanks so much for having me.
We appreciate it.
Yeah, it was great.
All right. So if you like this episode, don't forget on Spotify, you got to leave us a review so more people like you can get this information and start living that fine life. So thank you very much. Take care.